Hello and good morning, folks. It's Friday today, and we at Almus, as our ritual says, are continuing with TGIF. So, folks, welcome back to Almus Market Mornings, where uh, we are going to update you about the financial markets on regular basis. And what an interesting session we had yesterday. Google stock Alphabet went sliding after their AI as a competitor for ChatGPT was found with an error. Such functioning of stock markets always said to amaze me. Just a small error by an AI led to the stock stumbling. On the other hand, if we talk about economies, Bank of England was continue continuously under concerns from the wedge between the wages of public and the private sector, which has led to a large-scale strike among the public sector employees, which continues to put a financial drain on the expected increase from the government for these public sector employees' wage. Other than that, we have the Japanese government uh, about to present the nominees for the BOJ leadership today. So, folks, as we have already been talking about, Mamiya has been one of the leading contenders for the succession of Kuroda. But at the same time, if we have to talk about central bank actions, it still needs to be seen how the Fed continue to act as the yield curve inversion has not yet been settled and it is continuously high, probably uh, the yield action taking further higher direction. So JK, I'd like to know from you what exactly is going on for the yields to start moving higher again, and what is going on in the markets.
Yes, good morning. In the absence of any significant data, a lot of focus on central bank speak, central bank actions, which has continued till today morning also. To start with, we had after RBA, the Reserve Bank of Australia and RBI, it was the turn of Swedish central bank to move with a hawkish hike yesterday. They raised by 0.5% hefty hike. Up to 3% today, and forecast further tightening in the months to come to combat inflation and headwinds for weak currency. The central bank also planned to shrink its balance sheet by actively selling down bond holdings. So while Swedish central bank or their moves are not so closely followed many times, but for the overall global picture, I think it indicates that the central banks are divergent in their views on inflation and approach on monetary policy. While some of them are mellowing down, some are still hawkish, quite hawkish. In fact, Reserve Bank of Australia revised up the inflation forecast again today and said that considerable uncertainty about outlook and level of rates were needed to meet the objectives. Bank of Japan Kuroda lost no time in saying that the benefits of easing outweighed side effects and BOJ easing was appropriate. So he's losing no time in keeping the dovish sentiment intact. We had the German preliminary inflation number yesterday with month-on-month and year-on-year rising compared to previous month, while related to expectations, it was lower. And we had, even Bank of England Chief Bailey towed the line of Powell, saying that they expect inflation to drop significantly this year due to strong base effect. Similar impact may be seen in Europe as well. This means that central banks will mellow down their hawkishness till the base effects wane and be watchful for second round effects. So we should thus expect dollar and stocks to oscillate quite a bit in the coming months. Let's remember that amid all this moderation, the core CPI remains sticky in most of the countries. So uncertainty about inherent inflation and also hawkish bias of some central banks led to sell off in bonds yesterday, with the 10-year rising 12 bps and 2-year by 10 bps. But what really triggered the bigger move in the yields higher was the poor response to 30-year bond auction by the Treasury, where the cutoff came at 3.686% versus 3.585 previously, so prompting some market participants to call it as an ugly auction. So the futures are pricing in Fed rate to peak at 5.15, which is matching with what the Fed dot plus was saying, and this is about 25 basis points higher than what we were seeing last week. Stocks took cue from the move up in yields and 30-year bond auction, and they raised all of their earlier gains to end losses close to 1% for all the major indices in the US. European stocks hit a 1-year peak and slipped, and on the charts it does show a bearish formation. The closely watched, weekly jobless claims coming slightly higher initially gave some lift to the stocks, but that was very temporary. Also, on the central bank side, as you mentioned, also Japanese government is planning to present the new Bank of Japan chief to Parliament on February 14th, according to some news channels. Although there is no further confirmation on that, market will be closely watching the appointment, as the new governor's agenda will be scrutinized as to how quickly the central bank could phase out its massive stimulus. Dollar has had a mixed reaction yesterday, initially falling after Riksbank's decision on rates, along with the krone, which strengthened by more than 2%. But the dollar rose back again after this small fall, and it against major currencies it was up again with the rise in yields in US. The recent corrective dip in the dollar is set, rather the recent corrective up move in the dollar is set to continue towards 105 in the coming days, though market promises to be slow until we see the inflation numbers next week. As for the rupee, it was a range-bound day with lack of fresh factors to push it either side in a big way. Steady buying interest held the dollar up at 82.50, while we did hear some inflows related to green bond issue. And even the broad dollar moves were confined to small band during Asian and Indian time zone, which did not inspire any fresh push of rupee in either direction. We should expect more range trading to continue in the coming days. But I think one of the recent news reports saying that MSCI was reducing the free floats of 4 of Adani Group shares outstanding that are available to investors for purchase is having some impact on the stock futures, already showing nearly 0.5% lower. And in a market that is looking for some news or cues, this may be sufficient for rupee to see some weakness today. It depends on how the stock market behaves and the flows pan out. As of now, the month has seen steady but albeit small outflows, but it's very important to see how this trend goes in the coming days. Rupee should be confined to 82.45 and 82.85 for the day. Thank you.
Okay, JK, that was quite good. And yes, folks, the MSCI flows have been making quite a bit of rounds in the news lately. And there was another update on the same side, wherein MSCI has recently included a couple of more stocks, which is Bank of Baroda, NCG Power, and Industrial stock into their index, which can also lead to some bit of flows coming in. While they have, excluded another one, which is Biocon from their index. So a very small outflow of Biocon, whereas a good inflow of the above mentioned two stocks can be observed, along with the possible or the potential flows from the Adani. All said and done, folks, there is quite a bit of a divergence that we are been experiencing from the central bank side. So some of the central banks are looking to pause their actions, while some continue to stay hawkish. For example, the Fed as well as the RBI. RBI was found raising inflation expectations, whereas a lot many banks are talking about pausing their rate hike cycle, which is not so much in sync from what we were seeing in the past few months. All said and done, we are still very heavily watching the way BOJ will be acting, as the Japanese yen is also one of the major currencies that can, influence the financial markets quite significantly. And the new governor's agenda would be assessed for the plan ahead of the BOJ. That said, for today, folks, we shall come back again on Monday with another round of updates. Thank you so much for listening.